The big brains out there are predicting that the worst of inflation is behind us. Mortgage-backed securities and bonds, like a slow economy. Slow economy is good for interest rates.
In part 2 of the Slow County Real Estate Podcast with Hal Sweasey, Ermina Karim from Guaranteed Rate, and Chad Van Til from Pacific Trust Mortgage give some insight into what they think the market will do over the next 12 months. They'll try to read the tea leaves on the Fed's actions along with other indicators like a falling inflation rate. Time to get out the crystal ball. It's prediction time. Here's your host, James Bueno.
It's another beautiful day here at Team Sweasey. And it's beautiful because I have a beautiful gentleman right in front of me, Mr. Hal Sweasey. How are you, sir?
I don't know what to do with beautiful, but I'm just going to let that slide.
Yeah, what?
Because we got way more beautiful people.
You know what? Actually, the window's behind you, so it's beautiful outside, and you're just blending in with
my outline's beautiful.
Your outline, your silhouette.
I'll go with that.
Yeah,
I'm
beautiful
good.
silhouette.
All right, thank you,
Mr. Pete. How are you, sir?
Phenomenal. Couldn't be better.
Phenomenal.
Yeah, I don't get the window backdrop, but
you don't.
Pretty good.
You have a board behind you. Looks great. White backdrop.
Fair enough.
Today we are fortunate enough to have two great mortgage lenders here locally: Ermina Karim from Guaranteed Rate and Chad Van Til from Pacific Trust Mortgage. Ermina, as we start, we'll do this at the end too, why don't you just say where you're from, what your company is, how people reach you if they want to reach you. Let's just start with that.
Fantastic. Thank you so much for welcoming me back. My name again is Ermina Karim. I'm a lender with Guaranteed Rate. Guaranteed Rate is the third largest lender in the country. We are national, and I work out of the San Luis branch. I can be reached with my business partner, Donna Lewis, at donna.ermina@rate.com or on my cell phone any hour of the day.
Okay.
805-602-0248. And I've been living on the Central Coast for the last 16 years and loving being in this market and in this community.
And Mr. Van Til?
Hi, I'm Chad Van Til with Pacific Trust Mortgage. We are a homebred company here in San Luis Obispo. Started the company in 2002. We're a direct lender, correspondent mortgage lender, once again based here out of San Luis Obispo. We can be reached at 805-543-4422 or at our website, pacifictrustmortgage.com.
We're glad you guys are back. And so if we kind of go back a year ago, so July 2022, there was a big change in mortgage rates.
I mean, we've already now seen the highest growth in history in terms of the period of time. And so last July, I think we were sitting here shocked by how rapidly rates had increased,
right,
and hopeful, some of us, that we might see some reprieve with the Fed's actions to that point.
It sent a shock to the market, I think nationwide, but for sure locally. I mean, me dealing with sellers and buyers, fear, apprehension, not getting a bunch of offers, the change was really, really drastic. I mean, in all phases of the business, right? I would say.
Yeah. When you were looking at affordability, as you know, when people were looking at rates and payments that were in the high 2s to low 3s, and then within a matter of weeks, jumping up to 4 and then to 5%, the payment shock was hard for a lot of people to go ahead and absorb.
So anything else you guys can do that maybe people aren't aware of? I didn't know you could lock your rate for a year, whatever it is, to help those lenders right now with a little bit of that rate shock?
I think what has come back in favor over the past year and a half are the buy downs. They are pretty widespread. So your temporary buy downs where you can buy it down 3%, 2%, 1%. So you're gradually moving up in rate. So once again, though, there's an upfront cost to do that. That usually is negotiated often with a builder or a seller as an incentive to go ahead and allow a little bit more of a soft landing with what that payment shock or increase in coming is. The problem is it is short-lived.
Okay.
So the other option is to obviously pay some points to go ahead and buy it down and take advantage of that strategy that we discussed a little earlier as well.
And buy downs used to be more common. So if we put a specific example on it, so let's just use round numbers. And I hate to use these numbers but they're reality. Let's say someone's getting $1 million loan, and you say a 3-2-1 buy down. So today's rate's what? We'll call it 7. So that means the first year, what is their rate?
You can go ahead.
Okay. So yeah, you're going to go down. If you buy it down, depending on what your buy down is, you could buy it down to have a 5%, 6%, then 7%.
That would be a 3-2-1 buy down.
Yes.
Okay, gotcha. And that'll make a big difference. So you got 3 years till you bump up to the full 7%. And any time in the meantime, can you refinance it if we have oh my gosh, this rates have dropped down?
Yes, but the disadvantage of that is because you've already paid that upfront fee to really buy the rate down. So you
can't get that back.
You can actually get a portion of that rebate back, but it is a portion of it.
Yeah. Okay.
And the most amount is spent up front, typically.
Correct.
The first year.
Right. Okay. In terms of costs, so the buy downs are a good way to go.
Yes.
Yeah.
It's definitely been a way. I mean, I think as Chad was giving explanation earlier on permanent buy downs and buying down a point, that really, because it is getting you so much of a lower rate now than it historically has, that's definitely, when we were talking earlier about, well, rates are 6.5, well, that's because most of our clients are looking at accessing the market with that kind of point buy down and with break evens that maybe are 2 years.
Yeah.
And so they're looking ahead to say, does it make sense to invest? Because do I think I can refi within the next 2 years, or do I think that rates may be in this range, and so it's better to buy down now, have the slower payment, and then down the road past that investment.
And then to what we were talking about too. So to me, as a first-time buyer, this becomes one of the tougher markets for the most impacted. You guys see a similar thing?
And I've got some information actually from it was just a news feed from NAR. They broke down 7 different areas in the state of California, like northern, southern, central. Central Coast was one of the 7 territories that they broke down, and every single territory was down year over year in median home values, except for the Central Coast. We were the only region that NAR was tracking, or I can't remember if it was NAR or CAR, that it tracked. That
what do those words stand for?
The National Association of Realtors, California Association of Realtors. I apologize for that. So the San Luis County is still growing in a way properties are appreciating because people want to be here, and we were always going to have that, that want to be here factor. The weather, the beaches. I mean, heck, even what's the temperature today in Tulare? It's 110. And it's 68 degrees outside right now. Sun shining, ocean's blowing, cool air on. It's just gorgeous, right? So, oftentimes I get people that are moving here from outside the area like, gosh, I can't believe prices are so ridiculously high, and then I can't pay that much for a house, and I have to remind them like, you're really not paying that much for the house. The house is $500,000. You're paying $1 million for the weather. And that's almost a truism.
Right.
It really is.
Yeah.
We touched on before how strong that buyer demand is here. That fact. But it's the inventory, Hal, and you could really speak to this, that I think is our biggest issue. So we know that the buyer demand seems to still be there, even regardless of rates. But how about enticing sellers that have that 3% rate that are looking to move up? Are you feeling some resistance on the selling side? For getting people to list their house because they're no way moving into if they have to obtain another mortgage?
Yeah, financially it's a tough jump, right? I'm going to give up 3 to go take on 6.5. So the winners, and we've talked about this before in the podcast, are those that, I'm selling for $1.2 million and I'm buying for $600,000. So I either shrink my mortgage so much that the difference in rate doesn't matter, or I pay cash. And sometimes you can do that locally, but maybe that's too big a drop, or sometimes you leave the area. And then anybody with high equity positions are in good shape. They've owned their house a long time. Now, if they're over 55, you can transfer your tax base. So for those people, it's not so affected. But, for the average family that wants consistent housing, doesn't need to change that much, it's just a big price to pay, as you pointed out, in terms of making that move. So people are a little bit rate locked. It's expensive to build. It's expensive to start building, So if you own a house, you're in good shape. And if you can get in, it's great. But it's got to be a pretty serious motivator to sell in this marketplace, right? And nobody here ever has, people go, I want somebody desperate. I would always get that, hey, so we don't have people that have to sell. We have people that like to scale down, scale up, move sideways, move next to the kids, and buyers that would also like to, right? So. Yeah, I don't. It's hard for me to see a big change in inventory coming forward. So, how much is family help with down payments, co-signers, that sort of thing? How are you seeing more of that?
It's a significant part of our first-time home buyer market, for sure. In addition, I would say that there have been some shifts in the way that loans are priced. pricing adjustments that have happened to rates over the course of the last 6 months that have helped.
Right.
Certain buyers have better access to pricing than they historically have. So whether it's FHA loans, where their mortgage insurance premiums have come down, or it's individuals with lower credit quality are paying less than they historically have paid, those pricing adjustments to rates. So that's made improvements for some. So that makes that can be significant savings. Those FHA cost adjustments can save somebody $800, $1,000 over the course of the year.
Wow.
So those have helped.
Should we wrap it up with our going for next year?
Next year.
Throwing the darts out?
I sent JT a text, and he gave me his guess.
Oh, we'll save it for last. We don't
First or last? Okay,
last.
We'll go last.
You're
Okay.
either first or you're last.
Yeah.
So,
all right, so we're going to go around the table. So, Jay, that means you're first. What's your prediction for next year, summertime?
July 2024.
That's a really good question.
See, he just doesn't want to answer.
Here's the thing.
Float around it.
I still believe that the rates are going to, I know I'm looking at the inflationary rate. Like a year ago, it was over 8%, and today it's at 4%. And I think that's going to adjust, and we're going to see, I think the rates are going to come down to below 6 before the end of the year. Now, I'm not in this business. I'm in the on the sales side. But
We're all in the business. We're all guessing.
Sure,
Come on.
That's all
Come on.
Disclosure.
So we made it to December. We got to make it all the way to July.
All right. So
Come on, all the way to July.
July, I'm going to say we're probably floating around 6.25.
Okay.
6.25. J. Pete. All right.
All right, I'm going to say a little more optimistic here. I'm going to say that we're going to be below 6. And I'm going to go and say 5.5.
I love all the wishful thinking.
Yeah, I'm below 6 as well, and I was 5.75.
Okay, I'm going to go the opposite direction. I'm going to go 5.
You're going to go 5?
I think it's going to be lower
All the
next
way.
year.
You can't take 5 because JT took 5.
Well, text him and tell him it's too late. I already spoke. Okay, I'm going to take 4.99.
What? 4.99.
You're welcome.
Yeah.
You're welcome. 4.99. I think it's all going to kick in about a year from now.
All right. Well, I hope so. Does anybody have any final thoughts for today's podcast? Yeah,
okay.
you do.
So, does the winner? Do they get? Is it going to be a full bottle of champagne?
They get the half a bottle of tequila,
or a full bottle,
or a full bottle of champagne
for the winner,
and it's gonna sit there for the entire year.
Yeah.
Yeah.
Okay. So the winner gets their choice, and then the loser has to take the other one.
There you go. The farthest.
That's not really? Yeah. No. We'll figure out something else for the loser.
Yeah.
So if anybody ever wanted to know what the Hal Sweasey green room is like, that was just the perfect example. For you.
Half a bottle of tequila and well, I'm assuming nice bottle of champagne.
It's chilled.
It's chilled. Yeah, it's chilled.
So is the tequila.
It is. All right, everybody. Thank you so much for being here.
And Ermina, would you again give your phone number?
Oh yeah, sorry about that.
Again, thank you so much for having us here today.
Of course.
Ermina Karim, and my number is 805-602-0248, and love to connect with anybody who needs help.
You'll do a great job. And Chad?
Always a pleasure to be here. Appreciate it. Chad Van Til, 805-543-4422 with Pacific Trust Mortgage.
Thank you, guys.
Awesome. Thank you very much. We'll see everybody next week.
Thank you for listening to the Hal Sweasey podcast. Be sure to subscribe and rate this podcast. It comes out every Monday, so check for it in your feed for the latest information on the San Luis Obispo County market. The Slow County Real Estate with Hal Sweasey podcast is available wherever you get your podcast and on halsweasey.com, where you can find current listings and other real estate tips. halsweasey.com, that's HALSWEASEY.com. I am James Bueno, Director of Marketing for the Hal Sweasey Group. If you're looking for anything real estate, give us a call, 805-781-3750.
Hal Sweasey is a licensed California real estate broker. DRE number 01111-911. The Slow County Real Estate with Hal Sweasey podcast is a production of AGM Podcasts. Subscribe wherever you get your podcasts.